Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some of the ticker symbols that were in play on Friday. Okay, first up, let's take a look at DCTH. This had some after-hours news. It looks like they canceled the reverse split. Keep in mind that is always a big catalyst for a move higher in penny land. As you can see here, 7.2 million shares traded. It closed up 51% and at 0.751. Notice that the high was at 0.798, which is our big resistance level. If you look at this chart here, the big level to break is 8. It's going to gap up open. It looks like above the high close resistance level on the 9th, which is this white candle, and then the top here of this wick here is representing the 8 level, and so what we're looking for is a gap up open above that, and then it should, if there is bullish momentum, it should test this 100-day simple moving average at 0.111, and that's going to be the key level to break. Bulls are going to want to see a close above that level on Monday. If the 100-day simple moving average turns into support, as you can see here, the 200-day simple moving average is way up here at 1.12, so it's way up in dollar land. So there could be a huge run if the 100 turns into support. As you can see, there's a super long multi-month downtrend, so there's going to be some horizontal resistance, but there wasn't huge support on the drop, so this could get moving. The big thing is going to be if there is a gap up open, that will create an unfilled gap on the chart, and the saying in pennyland is gaps get filled. As you can see here, there's a gap between these two white candles, and the next two red candles came down and filled the gap, so always keep that in mind. If the 100-day simple moving average fails to break on Monday, and then you see it the share price pull back and a black candle starts to form on the daily chart, that's going to be a red flag. Your signal to get to the sidelines and look for a reload on the gap fill, because the black candle will signal that it's going to need to break and close above the 100-day simple moving average to remain in play. All right, so this is looking good. There was big volume down here. There was big loading before this move, and if you look here on RSI at 54, these are old annotations here. So this is a chart that we've been working on, and so down here, the annotations are still in play here if you want to read that. But before it was frothy, and then notice how the Fasto worked back to 50 and RSI worked back to 50, and so now they both have reset. Now there's a lot more juice in the tank to push higher until overbought levels are hit. So the chart is reset and ready for a push higher. It's just going to need to turn the 100-day simple moving average into support. Okay, let's take a look at MYO. This is a recent IPO. It's been trading for 5 days now, and it had the big move on Friday, closed up 60%. The bullish move actually started on Thursday when there was this big volume spike, and then notice that there was this break above the 50-day or the 50 simple moving average, this green line. Notice how it was resistance right here, and then there was finally a close above. That was your signal that it was in play. Notice that was on a volume spike, and then see, notice how it broke up and there was a big volume spike, and then the volume came into the move. There was a giant volume bar here at 145, and then the candles continued riding EMA4 support higher. That was a signal that it was in play on Thursday and it was ready to push higher. And then on Friday there was a gap up open, and so now there's a gap on the chart, and so that's created a target for the market makers to pull the share price back if the share price fails to hold support. Notice it ran all the way up here to 18, hit resistance and pulled back. It did close below the middle Bollinger Band. It's going to need to hold that 1475 level in order to stay bullish on Monday. If it can't break back above 15, that's going to signal downside risk. You could see a drop all the way down here to the 50 simple moving average and the lower Bollinger Band, which is going to put the share price back down to 11. Now, if it gets down to 11, it might just go ahead and fill this gap down here. Okay, so the top of the gap is going to be the first support level. Is going to be the 50 simple moving average and the lower Bollinger Band, and the next one's going to be the top of the gap, and then the third would be a gap fill and a drop down to the 100 simple moving average down to the bottom of the gap. That would signal, that would be a good catalyst for a bounce and a move higher. So if it does break down and it can't hold 15, you could look for a potential reload off of 9. That would be a massive drop. So I know the bulls are not looking for that. If it can hold for 15, then you could see a potential run back up to 18. So yeah, so keep an eye on MYO. It is in play. Okay, let's look at CGI. This is a chart we've been working on. Notice here that even though it's been on this multi-day run, RSI is at 63, so it still has room to run until overbought levels. It has been in the overbought power zone on Fasto. Notice plus DI is starting to break away here. It's above the ADX and minus DI, so the bulls are in control. What we were looking for this week was our target to get hit here, which is the 50-day simple moving average, and we wanted to see a close above to signal more upside potential, and that did happen on Friday. So it did close above the 50-day simple moving average, currently at 299, and so basically $3 needs to hold. If that level holds, then it could run up here to the top of the gap. This will be the next target. So this up here in this 375, 380 zone, that would fill the gap. If the 100-day simple moving average turns into support, it could end up, an uptrend up to the 100-day simple moving average. If the 50 simple moving average fails to hold, then it could pull back and test this middle Bollinger Band. What bulls want to see is they want to see the top of the gap of the channel, the bottom of the gap, turn into support. We'd like to see the candles continue riding EMA4 support higher. This has been a really nice multi-day run. Look at all the green volume bars in a row. If it's not broke, don't fix it. Just keep riding. It's just been stair climbing higher. Okay, so keep an eye on CGI next week. If it can hold the 50 simple moving average, it should continue. Now let's take a look at AVGR. Okay, this is got a nice daily chart going here. RSI closed above 50, so it's now in the bull zone. Keep an eye on Fasto. It's at 49. If it can bust above 50, that'll signal the chart is heating up. We've got a bullish crossover on ADX with plus DI crossing minus DI and ADX to the upside. So that was a really bullish development, signaling that there's more upside potential. Okay, so what happened here on Friday and why we like this play is because it closed above the middle Bollinger Band here, currently at 0.41. That is the key level to hold. As long as the middle Bollinger Band holds, a new uptrend could continue. Notice how it closed above the middle Bollinger Band back in May, but it failed to hold that level, and it consolidated further. Many times the second time above that level is confirming that it's support and then it's able to launch higher. The big level to break on this chart is going to be this descending resistance line, and then the upper Bollinger Band and the 50-day simple moving average. This 54 currently is the high level. This is also lining up with the high close here, the June 1st close, and so that's going to be the big zone to break. If it can get above that, then it could run up here to this high close back here on the 17th, and then if you notice, there's not a lot of resistance. If it can get going, there's a gap way up here that's lined up with the 100-day simple moving average. So if AVGR can turn the 50-day simple moving average into support, it could possibly go up and fill this gap up at the 100-day simple moving average. First things first, it needs to start a new uptrend and break through resistance. So keep an eye on AVGR. Okay, let's take a look at MNKD. Okay, this had bullish reversal confirmation on Friday. You've got RSI is in the bull zone with room to run until overbought levels. Fasto, keep an eye on it for making a move above 50. That would signal that the chart is building strength. A nice uptick on plus DI. What happened on Thursday is bullish reversal pattern, bullish engulfing reversal pattern formed following a multi-day drop, and then on Friday this white candle and higher close confirmed the pattern. So it's back above the middle Bollinger Band and back in this uptrend. And so notice how it bounced. Okay, so it bounced off the bottom of this channel. As long as this holds here, and the 50-day simple moving average is the big level down here. And then what we want to see is a push above this May 30th close, and then back up to this 100-day simple moving average at 179. If you can get above this level, then the top of the channel is way up here at this ascending resistance line. And that's lined up with the 200-day simple moving average at 243. So there's really a big upside potential if it can break above the 100-day simple moving average and turn that level into support. If it fails to hold the middle Bollinger Band, and it failed, it had a lot of struggle with 160, 165 zone. If it fails to bust through that again, and that turns into big resistance, you could see it drop down to the 50-day simple moving average. So it's going to be really important that it holds the middle Bollinger Band and the 150 level next week. That was really nice seeing the confirmation. What bulls want to see is notice how the volume has been, very average and consistent volume for several days in a row. What they want to see is a bullish volume spike, like back here, like this spike here. Notice how this got the run going. So you want to see a bullish volume spike and a push through resistance to signal the chart is heating up. Also keep an eye on MACD. MACD is pinched on the 8, 13, and 5 and pinched on the 12, 26, and 9. So on both time frames, you want to see the MACD line cross the signal line to the upside. Keep an eye here on the 15-minute chart. This is a MACD, MNKD 15-minute chart. And this is showing here, this is something we were working on Thursday, and we were showing how this was heating up. And it was, it broke above the middle Bollinger Band, and then it was this candle here at 1 above the 50 simple moving average. That was a signal that it was in play, ready to head higher today or on Thursday. And then once it closed above the 100 and it held that level, that was another signal that there was more upside potential. And it had closed at 148 on Thursday, and so we were looking for a break above the 200 simple moving average. That happened at the open, and then we wanted to see the 300 turn into support. If the 300 could turn into support, then that's going to be the signal that this is a strong new uptrend, and that there's going to be more upside potential. It's always the 300 simple moving average on the 15-minute chart that's the big level, and so now you've got MNKD above the 100, the 50, the 200, and the 300 simple moving average on the 15-minute chart, and now it's also above the middle Bollinger Band. So it's really it's trying to break out here, and if it can hold this level and get above 158, then that should signal more upside potential. Notice there was some loading into the close here with a nice volume spike. There was MACD failed to cross over. Okay, and then it had a bearish crossover here. Bulls want to see it cross back over with the bullish crossover. Okay, so if support fails to hold here, then you're looking at a drop down here to this 300 simple moving average. Notice how that's at 152. So that's lined up with that really, and then you've got the 200 simple moving average at 150. These are lined up with that really key 150 support zone. It's going to be the really big level to hold. If that ever breaks, that's going to signal downside risk. As long as candles are forming above all these moving averages on the 15-minute chart, it signals more upside potential. Okay, let's look at LINU. I'm going to show you a longer term chart here so you can see the upside potential. Okay, notice that we've got RSI at 59 with more room to run until 70. Look for FASTO to break above 50. What it's been working on here is this 300-day simple moving average, this blue line, and so it had closed above it back here in the end of May, and then it pulled back. It failed to turn it into support, and now it's back up hitting that level. It's currently at 57. If it closes above that level next week, it should run back up to this high close here at about 72 and test that level. And then if it can close above that, then you're looking at a potential run back up to Dollarland. Look how Dollarland's lined up with this big support level back here in the past. So yeah, keep an eye on LINU. It's got a good uptrend going, and it's been holding EMA4 support. If it can bust above the 300 simple moving average, it could really break out higher. Notice this had formed a double bottom. So this is breaking out after a big double bottom, and notice there's really big money behind the move. There's giant volume bars. So our saying is to follow the money. So yeah, as long as there's big volume and behind the play, and it's breaking resistance and it's holding support, the signal is to keep riding. So yeah, so keep an eye on LINU to break resistance and continue the strong uptrend next week. Okay, look at NIHD. Okay, this is a stock that has been on a multi-day drop. Notice it is at oversold levels on FASTO. Okay, you got FASTO down here below 20. RSI broke below 50, so it's looking very bearish on both of those indicators. Notice it has had the 8 red candles in a row. So it failed. It closed above the 50-day simple moving average, the green line, but it failed to turn into support. Notice it formed the nasty black candle, the candle that shows the bears. This is the bull trap candle. You know, it opened up here, and then it ran, but then they attacked it, and it went all the way down and closed near low of day. This is why we don't hold when a black candle forms after a gap up open. Notice this is a gap up open because it signals downside risk. Notice the bears were able to short it all the way down, and it filled the gap. It filled the gap, and it kept going lower. Now it's trying to bounce off the middle Bollinger Band. So notice that there was a giant volume spike on Friday. That's what we look for at the bottom after a big drop. A multi-day drop, we look for a bottom spike to signal that the bounce players have loaded. So it looks like everybody loaded on Friday. If you take a look here at the 15-minute chart, you'll see the giant volume spike into the close here. Look how like almost 9 million shares traded. So look for a big a bounce off of that level and push higher above the moving averages next week. Okay, thank you very much for viewing this video. Please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Okay, thank you.